Today was a huge day for markets as one of the most important economic readings we see in the United States could cause crypto markets to shudder, especially because this one is said to largely impact how the Fed is going to cut interest rates for the first time since December of 2024. And today's jobs report will likely tilt those rate cut odds, which will reflect in the market, and that includes the stock market and crypto. In other words, if the labor market worsens or tightens, this is going to affect our crypto portfolios and XRP. Are we about to see a flight to crypto as the markets start to shudder, or are we going to see a hard reset where virtually everything dumps at the same time? And here's actually where things get interesting, because currently institutional crypto and XRP trading just flashed a monster signal as CME reported a record $36 billion in open interest across crypto futures and options in late August. This is big money wanting a piece of the action ahead of this macro data. Now, in most scenarios, this would be a nothing burger. However, the CME Group, or the Chicago Mercantile Exchange, is literally the world's largest leading derivatives marketplace. And so crypto being the fastest growing is a signal that things are going to get crazy near the year end. And so much is happening as even Ripple just pushed the USD-backed stablecoin that they've offered, RLUSD, into Africa via Chipper Cash, Valor, and Yellow Card, which are major players in the African market, and they desperately need access to US dollars in their current economic situations and digital dollar equivalents that are easy to transfer and move around, that are trustworthy and backed one for one with treasuries and US dollar equivalents. This will open new payment corridors while the world watches the Fed and the jobs tape. And the last piece of news I'm going to cover is the debate with SWIFT, which is now boiling, as a top SWIFT executive argued that banks will favor their own internal rails, tokenized deposits, or regulated stablecoins over XRP and RLUSD. However, the XRP community fired back and made a really good point, which we're going to cover. So let's dive into the video and stick around, because by the end you'll have the signals, you'll understand the risks of what's going to happen over the upcoming month, and I'm going to give you my playbook for what I think is going to happen next in the crypto market. And by the way, if you're looking to borrow against your crypto instead of selling it to have access to more capital through the end of the bull market for all sorts of opportunities, go ahead and check this out.
Have you built a crypto portfolio over $1 million but want to access your wealth without selling any of your coins? Well, imagine unlocking up to 85% of your portfolio's value to fund ventures like real estate, to buy other projects in the crypto space that are undervalued compared to the projects that you currently hold, or to diversify into different DeFi yield opportunities. That way you can live on the interest without selling any of your crypto. Well, we've partnered with a leading global office offering non-recourse crypto loans for investors with portfolios starting at $1 million. The same company that is trusted by the world's largest institutions and investors, because as you already know, the billionaires don't sell their crypto, they borrow against it. So if you're ready to unlock up to 85% of your portfolio's value without selling any of your coins, and you have a portfolio with at least $1 million, then email us at team@bullrunners.com. You're going to see our email contact in the description below, and we'll get you connected with the company that has helped clients like ours north of $100 million borrow against their crypto without selling any of it. So reach out to start a conversation with our team right now at team@bullrunners.com, and we'll talk to you soon.
Hello and welcome back to the channel, my friend. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. The first thing I want to cover is the labor market, because this is probably one of the most important economic readings that we are currently keeping a close eye on, and actually the entire market and world is, because this is going to be a major deciding factor in what the Fed does next, whether or not they keep interest rates flat or lower them, and we're going to cover that. But as of today, okay, we had a revision where we had non-farm payrolls, in other words, people that are not farmers on the job market, revised from 75K, which was the expectation, down to $22,000. So this is $22,000, which is a very negative economic reading. All the while, unemployment hit expectations, which increased from 4.2% to 4 4.3%. In other words, again, another negative reading, even though it's at expectations. A rising unemployment rate and a stagnant job market is really just a sign of a weakening economy. And a weaker economy tends to affect how people perceive investing and markets. If they see a weakening job market, unemployment rising, they're saying maybe I should start to pull my capital or cash out of the markets because things are going to get worse. They tend to be risk off, which means they are going to sell more volatile assets or risk on assets like stocks and crypto. Now, the Kobisi letter reported that last month, the May and June jobs reports were revised lower by minus 258,000 jobs. Today, the BLS revised the June jobs report lower again. In other words, one number came out in June, and now they're revising that number by another negative 27,000 jobs. Someone over at the BLS, the Bureau of Labor Statistics, is not properly doing their job, and that's why Trump fired them. That's a total of negative 285,000 jobs in the last 2 months. So things are looking worse in the job market. And again, this is huge because it's going to cause the Fed to have to respond. Now, in this article directly from the Wall Street Journal, they're stating that the U.S. job growth continued to slow down in August with just 22,000 new jobs, a sign that the labor market is deteriorating markedly. The government revised its numbers from previous months and said that the economy lost a net 13,000 jobs in June. It was the first such decline since December of 2020. It's been quite a while. We've seen a very hot jobs market, and now we're finally cooling off. As Friday's report all but seals the case that the hot jobs market of the post-pandemic years is over. And when you really think about it, since the bottom of basically, 2022 into January of 2023, we have essentially been in a full-fledged bull market. That makes a Federal Reserve rate cut this month practically guaranteed. So with rising unemployment, with a decline in the labor market, the Fed is highly likely to lower their interest rate from 4.5% lower. And that looks like it's going to come in probably at 4.25% or 425 basis points to potentially even 0.5% off for 50 basis point rate cut. But here's where things are actually quite interesting. Even though we gapped up in pre-market trading on the S&P 500, which is really just a good way to track the health of the US economy or stock market, on the day we did see quite a bit of sell pressure only to see it get bought right back up. So one could argue this is one of the most resilient economies or markets in history. And usually there's a deviation between the two, right? Some people would argue it's not a healthy economy, but for whatever reason, people in the markets are still very much risk on. So why is crypto a bit down? One could argue it just has run really hot. Even off the lows on the S&P 500 right here, we're up about 35%. And you can see in that same period of time, Bitcoin is still up 50%, while XRP is up a whopping 75.6%. And that's simply because the smaller assets by market cap, when you look at the market cap of something like XRP currently sitting at about $170 billion, while Bitcoin currently sits at $2.2 trillion, it's easier to move smaller assets by market cap. So in a bullish environment, your smaller cryptos that are still good cryptos, I'm not talking about crappy cryptos, I'm talking about your major players in the space, are going to pump harder for larger percentage gains. So yes, this is still a very much a resilient market, and I do believe we're still in a bull market, even with a negative job reading and number. If interest rates are lowered, that's going to be taken as a positive for the market and economy because it's going to essentially incentivize more borrowing, which should produce more economic activity. In other news, we actually have something quite interesting, and that is the fact that the CME Group, or the Chicago Mercantile Exchange, one of the oldest and the world's largest derivatives marketplace, derivatives being literally the largest money markets in the world, recently made a post on their Twitter or X account talking about how August was hot and the crypto crypto space was hotter, as there was a record $36 billion in open interest for crypto futures and options on August 22nd, while XRP, Solana, and Micro Ether futures open interest hit all-time highs. And here's where it gets even more interesting, as Brad Garlinghouse noted that per CME Group data, XRP futures contracts were the fastest ever in just over 3 months to hit $1 billion in open interest. If this doesn't speak to the total institutional demand to trade and play with an asset like XRP, I don't know what does. And yes, the writing is on the wall. In the next couple of years, and arguably especially in the next decade, XRP is going to be far more expensive than it is right now. So from an investment perspective, dips are for buying. Now, in another recent development, Ripple just made their RLUSD stablecoin available to many people in Africa through Chipper, Valor, and Yellow Card. Currently sitting at a $700 million market cap, it's likely going to continue to grow into the many billions as the stablecoin demand all over the globe is going to grow as well for all sorts of different things, like stabilizing economies where they don't have access to fiat currencies of their own that aren't hyperinflationary or simply just don't hold the same level of value that the dollar does, as well as being able to trade and do business globally through the internet and through stable coins that are trustworthy, transparent, and settle near instantaneously. This was just completely unheard of in countries all over Africa and arguably all over the world for many decades. But even in the United States, this is truly revolutionary. So that said, here is where things get really cool. In addition to RLUSD being made available in Africa through these new partnerships, Ripple stablecoin is being used to underpin extreme weather event relief pilot projects led by the Mercy Corps Ventures in Kenya. So these types of pilot projects, if proven to work really well using stablecoins, are going to continue to expand and grow in other realms and areas all over the world. In the first project, it serves as a drought insurance for farmers, held in an escrow and released via smart contracts if satellite data confirms a drought is likely to occur. A second pilot project will utilize RLUSD to back a parametric rainfall insurance solution, delivering similar support during periods of extreme rainfall. So imagine, stablecoins are even helping farmers globally during periods of drought or extreme rainfall. And if those are just two of the small solutions that it can solve, what other major solutions will players like Ripple solve globally using their blockchain technology and the XRPL? Now, before we dive into this interesting little skiff between the Swift CIO and the XRP community, if you haven't already had a chance to, go over to altcoinpro.com, your one-stop shop to becoming a crypto millionaire. And again, we cannot guarantee results, but we've helped so many of our students who have consistently been here for almost a year, paying us $97 a month because the community, the education, the tools, the resources, the altcoin picks, access to live calls where I teach you technical analysis step by step, DeFi yields, airdrop alerts, the list goes on. This is easily the most value you'll get out of any crypto community on planet Earth, and we guarantee that or your money back in 14 days. That said, we've helped so many of our students succeed here with Altcoin Pro, so much so that they've more than made up for the costs of that membership sometimes in a single trade. In other words, your entire year can be paid off with one single opportunity, whether it's our quick win DeFi yields, where one of our DeFi experts shares weekly opportunities to earn really good yield on any of the cryptos that you hold in a very safe manner. For example, this one would earn you 14% yearly yield. This one would earn you 33% APR. In other words, many of our students actually go ahead and access or do this first and then take whatever profits they earn from the yield to pay for their membership. So it's essentially free and everything else is a free ride. Then we have countless of our students taking advantage of all of the education and training that we offer and some of the altcoin picks to win big. For example, Jose made a 118% gain on a token called Hype. Another one of my students that is consistently on my live technical analysis calls is now up 10-0 and recently won a trade for 66%. And the list goes on, as even Evan said that he wanted to thank one of our experts because literally just rotating Bitcoin to Ethereum when we called it netted him an extra $1,000, which essentially paid for his entire year. So head on over to altcoinpro.com to check it out. Worst case scenario, you ask for a refund if it's not for you. Best case scenario, this helps you to get ahead of the market and make the most out of this bull market through the end of the year. Now let's dive into this final piece of news as the Swift CIO claimed that banks will skip XRP in favor of their own internal payment rails, tokenized deposits, or regulated stablecoins they already trust, something like USDC or even potentially USDT, although that is far less trustworthy than a USDC. It is still far larger in terms of market cap. Now, the Swift Chief Innovation Officer Tom Zak recently stirred up debate by questioning the role of Ripple's XRP settlement rails in global banking, something that has really taken a life of its own inside of the XRP community, stating that much of the world's global financial rails will run on the XRPL. On LinkedIn, Tom said banks won't use XRP, citing it's not a deposit, not regulated money, and doesn't sit on their balance sheet. And if he really wanted to stir up some controversy, he did, because he even stated that it is a dead chain walking, that banks need neutral governance, not rails controlled by one company. Ripple fans shot back that the XRP ledger has survived 10 plus years of scrutiny. Now, one community member actually went ahead and put it in the work to state why this CIO from Swift is wrong. And so I guess this garners, or better yet, proves the point that Swift and Ripple are completely two different entities, and ultimately they're competing for the same clientele and customers. So no, it's not just going to be brought in and somehow Swift and Ripple are going to be the exact same thing. They do offer a lot of the same services, but ultimately they are competitors for the same clients. So in defense of XRP, he's basically stating that today banks pre-fund accounts all over the world just to make cross-border payments work. Trillions are locked, idle, and unproductive. Internal rails or tokenized deposits don't remove that need. However, XRP does. And ultimately, there is a lot of fragmentation between how these banks operate and move capital. So yes, JP Morgan can build rails for themselves. HSBC can also build their own, as well as Citi and all of these other banks like Bank of America. But what happens when you need to move value between them? You're back to the same inefficiencies and trapped liquidity. Whereas XRP is a single company, it is also neutral because it's not issued by any one bank. It doesn't sit on one balance sheet. It's a bridge asset that any institution can use to settle with any other institution. That neutrality is what makes it scalable, something no single bank token can offer, right? Why would JPM want to use a Citi token and vice versa? So in a statement by Tom from Swift, he said liquidity is one thing, legal enforceability is another, to which we respond correct, and that's why Ripple has been working with regulators for the last decade, and this is exactly why they won this lawsuit. They are working to be completely and totally transparent with clients and the regulators in Washington, as licenses have been made in key jurisdictions. ODL corridors are running live today, and the RLUSD stablecoin is that stepping stone. Regulation is catching up. XRP's role is already built. So let me know in the comments below, what are your thoughts on the statements from Swift's CIO? You can go ahead and look those up online. And will Ripple actually become the new Swift for banks globally over the upcoming decade? Thanks so much for watching this video, my friend. I look forward to seeing you in the next video. Goodbye.